Hello traders, welcome back to our YouTube channel. And in today's video, what I'm breaking down is one super effective Nasdaq trading strategy that you'll need in your arsenal. Now, this is something that I like to use on a constant basis. And the key aspect of this trading strategy is that it doesn't happen on every single trading day. It doesn't happen on a day-to-day basis, and it's very selective. So if you're looking to add something to your repertoire, this is the video for you. It's, for me, one of the highest probability Nasdaq trades that I have been looking at and trading over the past few years. And when it presents itself, it is magical. Now, Nasdaq is a super attractive market in the futures sphere. A lot of new traders, a lot of traders in general trade the Nasdaq because it has a lot of movement and volatility. The S&P gets slow, choppy, especially in periods of low volatility, while the Nasdaq is like boom, 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 10, 15, 30, 60 points everywhere, and boom, rich, right? So even with the Nasdaq, it's a very attractive market because a 10-point move can yield $200 per contract. A 10-point move on Nasdaq happens like that. It is very attractive, but it's also very, very volatile, and I'd say higher risk than the S&P. Yes, there are a lot of moves throughout the day. There are a lot of swings. If you look at the chart here on the left of the screen, you can see from 2140, so I'll just quote the last three numbers, 140 to 200, 60-point move. It's happened like twice. And that's over the past hour or so by itself. So it's a very, very attractive market. And I'm going to be breaking down pretty much in the strategy how to slow things down. Right? It's going to be a simple trading strategy for the NQ that I mainly use. And right, like I said, maybe to your surprise, not every day. Instead, only when that specific setup takes place. And I don't even use order flow for this. This is where it might be a lot more attractive for you guys. Just volume profiles. That's the only thing that I'm trading. A handful of levels, right, based on where the auctions are, and mainly looking for large moves. If you want more information before we jump into this intro, there is a blueprint on our site, the Blueprint Trading Futures. You can go and check that out, right? It's free, 100% free. You can see a breakdown of how I go about the futures market. So let's dive into this intro, and we'll look at this screen. Now on the Nasdaq, right, this is probably the move that I was talking about. Like my face was probably covering the screen. I just realized that. But you see these like swings from 140 all the way up to 200. It happens a few times here. And this is what's very attractive to people because a 60-point move, right, cha-ching, it's a lot of coin, $1,200 per contract on the Nasdaq. So yes, of course it's attractive. Now, let us break down this strategy. The concept around this strategy is distribution or volume profile based only, right? That's it. That's all I'm going to be using. And I'm using only two different volume profiles for this. I'm going to be using a large cumulative profile, which in this case is a 200-day. It sits over here on the right-hand side. And then the individual session volume profile, which is stacked up like every single one of these sessions, realistically. It's a very, very basic, simple aspect in the market, right? This one strategy doesn't happen every day, but when it does, very, very good. Now, enough of that. So if I'm looking in terms of these markets, right, I'm looking at a buy-only strategy. So that means that theoretically based on auction theory and balances and distributions, if you haven't watched that video or you don't necessarily know what that's about, you can go and check it out, a complete beginner's guide to auction theory on our YouTube channel. But from an auction perspective, if we're looking at this market, what I'm trying to do is I'm trying to find how a new auction is getting accepted to the upside. So all I'm doing is I'm trying to identify when we get into a new balance to the upside, and then I can look for long trades off of the retest of that balance, right? It's a very, very simple aspect. It falls under two categories. Number one, the trend continuation into a new balance, meaning that markets are already going up, right? We're already seeing a trend to the upside. And what we're doing is we're pushing prices into a new balance higher, right? A higher balance that hasn't been traded for a while, let's say, but it's in the trend continuation. That's number one. Now, the second concept is a failed sell and a reversal into a higher balance. So let me explain these a little more and how that shapes up. Ideally, we can draw a little here on Sierra chart. So let's assume that these are our two balances. These are two balances that we're looking at, and these are the balances that are going to dictate the start of the strategy. Now, what I'm looking at here is these are going to be 200-day volume profile balances. Like we'll look at some of these examples. So they're generally going to be fairly large, right? On the Nasdaq, it's going to be a multitude of maybe a couple of hundred points. It could be 100 points, right? It's a very big area. So concept number one is that let's say we're currently bullish, right? Prices are going on the bull side, right? We've moved into an auction from below into this one up here, and all of a sudden we start moving into a next auction. So this is the continuation of the move. When this happens, right? When this happens and we get a solidified close in this area, what I mean is that the market actually closed the RTH and the ETH within this area. What I'm looking for is the continuation of this, meaning that I am a buyer at the bottom band of that balance, right? That's it. Very, very simple. If I enter into a new balance to the upside, I buy the bottom band of that balance. That's the continuation of that move. Now, another aspect to this, the second part is a failed sell and reversal. So what does that look like? The second concept where this type of strategy can appear is like, okay, let's say we get a move into a distribution to the downside and we close one of the sessions over here, right? The next session, we move back up into the higher distribution. We close that session there, or the ETH. Same concept, right? I am looking to buy into the bottom of that balance. Long story short, right? They're pretty much kind of the same thing, right? Where I'm just looking for the acceptance into a balance higher and I'm buying the bottom of that balance, right? If we put it very simply like that. So let's take a look at how that kind of shapes up on a week-to-week basis. Because like I said, this long-only strategy, it's not going to appear every day, realistically. And I can use the individual volume profile areas to give me better guidance in terms of where I might want to enter and where these areas are expected to hold. So if I don't have enough information, for example, from this large distribution, here we can see, okay, we have this massive balance right here from about 960 all the way up to 320. So 19,960 all the way up to 2320. That's massive. That is very, very big. So realistically, this trade is only good towards the bottom band of that in this massive move with the potential expectation that we can go and tag the top band of that balance. So here's the day. This long, skinny little profile on September 19th or 18th, I should say, we close inside of this balance, right? We move through the bottom band of the balance and that day closes within that balance. Meaning, what does that mean? That means that I'm a buyer into that 960 area, 960, 970 realistically. That's where I want to buy into, right? So that's it. That's the general construct. I'll talk about the entries and exits in a bit, but I just want to focus on the visualization of how this setup takes place. So we enter into the auction higher and I want to buy the bottom band of that auction, right? We still hold, right? The next day, maybe we can buy, I think there was a little nice bounce off of it. It didn't last too long since we moved lower. But then the next day, right, we close back within it. Again, this requalifies the criteria. Because if we keep closing within it and holding within it, sure, this is a massive area of support, but it gets a little tiring. You got to start pushing higher. Otherwise, this scenario plays out where you get a drop under the balance low, right? And then we close the red arrow back within that balance low. So the next day, what am I doing? I'm buying that area. Simple, right? I'm buying that area. It swings higher. We eventually get a push back into it. What happens? I'm buying that area. So over the past, I'd say about 7-8 days, it's happened 3 times in this current balance, which helps out very well, right? That's not necessarily all the time type scenario, but it happened fairly frequently over the past 2 weeks or so within these areas. So all I'm trying to do, right, even if we get a move to the downside inside of this balance lower, I don't necessarily want to get active there, right? Even though, yes, okay, the balance low, maybe we can hold that, but I want to be buying strength and continuation. That's the premise of the strategy. So if we move into this balance lower right now, let's say under 19,900, and we drop into 19,720, yeah, there's a little support structure there. But for me, I want to buy when we move back up and close back above that 19,960 so I can hold that area on the continuation. So if I'm looking at some of these individual profiles, I'm pretty much looking at where either value areas drop off, that can help me, or low volume gets created, right, where these little values are. So low volume starts at this red juncture over here, so that theoretically should hold. This day, right, value area low kind of holds out, at the same area. So they come together. These are confluence regions, so I can hold that out, right? Similar scenario. If we go in the past and take a look at some of these other aspects and how they shape up, we start off over here, right? We have this balance, and these are tighter balances compared to the one that we just looked at, right? This one's like, we can say somewhere the bottom band is like 450, 440, right? So we get this move that barely closes above inside this area. So theoretically, what I'm going to do is I want to be a buyer into this balance low. So it works pretty well. It pushes up, and we're trying to attack this new balance higher. So once we move into this new balance higher above this 640 now, what am I doing, right? I can buy over here. We push up. Okay, great. This one's interesting. Again, what happens here? We get a slight little move. It fails this time, right? Because again, one of these concepts is that if I'm continuously buying the low band of this massive distribution, I would like to see it go up. I would like to see it make new highs. If it keeps diddling around, maybe I'd stop buying it for a bit. But we have this day over here that drops down and closes back above this balance, meaning that I'm a buyer again at the balance low, and we get this nice push to the upside, right? Maybe over here, maybe get stopped, maybe try it again. It works out to the upside. So it's not like 100% foolproof, but it does really, really solidify the potential if I'm trying to follow along with the long side based on the acceptance and continuation of the balances. Sometimes I get stopped out and sometimes it works really well, but the key is the first acceptance of the balance is going to be very important. That's the one that I really want to get on board, because as you've seen, we have situations where there's multiple tests of the same balance low area where they don't 100% respect it. They do for the most part, but realistically, that first retest of that balance low is going to be the highest probability. After that, you got to get a little more, you got to give it a little more wiggle room, because, right, if you can't make continuous new highs on a bullish move, the question is, how bullish really is it? So let's talk a little more about the entries and exits, right? Generally, I use these as day trades, right? I'm looking for a very, very large move realistic. I'm looking for a long move on this. Ideally, you can trade from the bottom to the top of the balance, but in some cases, like the current balance, it's massive, right? 19,960 all the way up to 320. It's probably not going to happen in a day, right? You're starting to get close to nearly 400 points there, right? So it's a very, very massive move. But if you're getting like 150, 90, 80, 60, right? 200 points, it's still a very, very viable move, especially on the Nasdaq. This type of strategy slash setup, call it what you will, the idea is that you want to hold the position for an extended period of time, right? I want to hold it for as long as I can, because this is a major, major structural low based on the auction that should present a larger move in the markets. So sometimes they could even turn into swings, but if I'm looking at it from a day trade perspective, I want that to be a very significant low for me to continue that momentum higher. So I want to enter around that area, keeping in mind that it's an area, right? It's Nasdaq. Nasdaq's a little more volatile and it swings around. Generally, I'm looking for about a 10 to 15 point buffer in that area to enter. So I can enter it kind of blindly within that region, understanding that I might be wrong by 10 to 15 points, and adding on top of that probably a 20 to 30 point stop, which is very wide. It's a lot of risk at that point, so maybe try it on the micros first. But the expectation, especially on the first move of acceptance, is a very high probability larger move. That's why I like it. So maybe size down a little less, but generally I'm looking at the area because I don't have to use order flow for this. I don't have to use anything other than just trusting the level based on this auction and this balance. So if I pinpoint 960, right, I can go 960 to 950 within that area. I'm going to shoot a few lots and put a 25 point stop, let's say. And boom, that's it. We'll see if it starts to go and it tries to continue that momentum move throughout. So the strategy is based on auctions and profiles. So getting confirmation for me is just price actually accepting into the balance and closing, so I know that I can buy that area realistically. So if I'm risking about like 20 to 30 points on this move, that means I'm looking for at least 2 to 3 times that, because again, I'm playing the massive balances here. So the expectation of a large move makes a lot of sense because it's directional at that point. If you accept into a bounce to the upside, that's directionally bullish. So I can look for a larger continuation that can yield me, right, something very significant. So if I'm risking that much, I'm getting rewarded a lot for it as well. So my exits would be generally based on where the extremes of these auctions are. If it's like a massive profile like this, the expectation of me catching like 350 points is probably pretty low. So I'm going to be looking at other individual profiles to identify where I can get out realistically, where my expected targets are, and also the drop-offs in the larger profile, right? You can see over here we have some divots. For example, at around 20,050, 20,080. So that's like a pretty big target. At that point, I'm already up 100 points, right? So why not? The next area is around 160 to 200. At that point, I'm up drastically over 200 points, so it's fine, right? So these allow me to target areas, the drop-offs in volume on the larger profile, as well as individual sessions. So for example, let's say this day already shapes up and I'm trying to buy it again on this day. So we pull back into it, right? We get that little head fake, we pull back into it, and I'm a buyer at 960, let's say. And I'll look at where the prior tops are, the poor highs. Okay, that's going to be a big target around 20,100, right? I'm looking at the prior POC and where the heavy volume kind of drops off as well. That's going to be another target, which happens to be the high of this move. You can see where this volume drops off the value area high. That's the high of the move. So I'm looking at those specific things. Now, overall, this strategy isn't that difficult, right? Realistically, it's fairly simple, but it requires a lot of patience, right? Because you can see over here, I've identified this as the balance low. This is an area that I was buying. So at the balance low between 19,960, 7 and 55, right? Just kind of arbitrary numbers there, but towards that 19,960, that's my buy zone. So if I start just throwing in some loss there and my stop is somewhere at 930, look at this massive monster move that's coming out of this, right? It holds extremely well. We can go through that test this past week. Again, we trade in the same block. Monster move up to 20,100 from that low, right? Even after this massive drop. Again, right? This is the head fake that happened. So let's look at the head fake. If I'm trying to buy this area, maybe I don't even fill on it, but even if I do fill, I'm getting 40 points out of that initial move. Drops aggressively, pulls back up, and I start buying it again, right? If I start buying it again, what happens? We get a very nice move that shapes up throughout the day, throughout the overnight session. So it's still holding even if there are mishaps. Like even if I buy it here, it pops up 40 points and I buy it again and I get stopped out, that's fine. That's fine by me. It's okay, right? I've already taken enough out of this as is. If I look at it here as well, right, it pulls down, it rotates a bit, right? We throw some lots in and look at that expansion all the way up to 20,160, right? So generally speaking, when I'm looking at this, again, like I said, it's a strategy that you don't trade every day. It doesn't happen every day, but when it appears, when these specific sequences of events in terms of acceptance into auctions appear, you got a high probability trade on your hands with this Nasdaq. And one of my favorite Nasdaq setups and strategies in the arsenal. So if you guys enjoyed this video and got a lot out of it, try it out. See the next time we accept into an auction higher, if you can be bullish at those lows, and tell me how it plays out. So if you have any questions, leave them in the comments. If you trade Nasdaq, leave it in the comments. Hit that like button, hit that subscribe button, and we'll be back with more videos just like this one. So trade this, test it out, see how it goes, and report back to me. There's a high probability that this trading strategy could be one of your favorites.